there was another narrative, I think, going on in crypto Twitter that was the flippening, not of Ethereum of Bitcoin, but of Solana flippening Ethereum. And friend of the show and investor, Santiago Santos, said this on the podcast. He thinks there's a 20% chance that Solana actually flips ETH.
Okay.
I thought we should talk about this
Santi.
take on Bankless.
Okay, let's hear the rationale.
Okay, so do you want to hear him explain himself?
Yep.
There's a version of this next cycle where Solana flips Ethereum. I think it's a greater than 25% probability.
You think it's a 25% probability that Solana...
20% probability that Solana flips Ethereum. I don't want to say this cycle doesn't necessarily mean that Ethereum shrinks in size. Solana just uniquely enables different use cases that introduces way more usage, utility, therefore value.
So Santiago goes in more detail in a follow-up tweet. Fundamentally, the Solana bull case boils down to this. 1, a viable scalability roadmap with more integrated network architecture, parallel execution, and local fee markets. Really cheap transactions, I think is what he's saying here.
Yep.
Number 2, Fire Dancer. This is a key network upgrade for network speed, reliability, and decentralization. We've talked about this a number of times on Bankless. So again, this is max throughput TPS. Built by Jump Capital, by the way. Number 3, talking to teams has made me appreciate use cases. So Santiago is a VC, so he's talking to the devs, which is definitely what you should be doing, and appreciate use cases that are only possible in Solana.
Only possible on Solana.
Category.
Oppose.
Okay. Number 4, the ecosystem survived FTX and is flourishing, similar to Ethereum post DAO hack and fork. I definitely agree with that one. Let's talk about these others and maybe contrast them. First of all, some people are saying this is more narrative than it is actual fundamentals.
I would be one of these people.
Okay, what's your take on this?
Okay, so this is kind of what has come to be the Solana chant. Fire Dancer, low fees, parallel execution, local fee markets, all of the things, by the way, that Ethereum doesn't have. Like Ethereum doesn't have local fee markets. Ethereum doesn't have parallel execution.
On its layer 1, bro.
On its layer 1, yeah. On the Ethereum layer 1. Yeah. And so like a lot of this is just like, hey, this is what Solana has that Ethereum doesn't have. It's kind of like how I will simplify and reduce this down to what the elements that I see.
Okay. Well, Santiago says all of these equal a 20% chance of actually flipping Ethereum. So let's say let's just quantify this. If Ethereum is valued at $1 trillion at some point in this market cycle, so that'd be a 4x.
4x,
That's a 10K ETH and above. Okay, that would make Solana would have to be above 1 trillion. Let's say $1.1 trillion, which would be about, I don't know, a 50x?
That would be, Ryan, for Solana to get to 1.1 trillion, that would be a 44x, which would put SOL price at $2,640.
Dang. It's big.
I should go buy SOL, clearly.
I mean, but let's talk about that. There's definitely a case for buying SOL, David. Right? But the question is, what is the case? Is the case fundamentals? Is it narrative? Or like maybe there's some difference in what people mean when they say fundamentals. Because if you talk to Santiago, he would say, guys, all of these are fundamentals. Yeah. Right. And what I point to you now that we have kind of much more maturity in terms of our change this cycle, I'd be like, show me the revenue. Show me the profits.
Show me the numbers.
Where's the $3 billion in blockchain
Get these ideas
sales?
Out of my face. Show me the numbers.
I'm a little bit more skewed on that direction. Like
the $25 billion network, show me the money.
A little bit, right? At a $1 trillion network, you better damn well be showing me how this thing is throwing off like, tens of billions in cash annually. Anyway, go on. What do you think's going on here?
Okay, so here's exactly what I think is going on here. There is this tendency, I remember doing this in 2017, where I would pull out my calculator, I would perceive some likelihood about 3x on my shitcoin bags, and then I would add those two together, and then that would be my future net worth. And I would look at, and so here's a kid, this is a meme that like everyone should be familiar with, because this is what you are going to do, Bankless listener, in this bull market. You're going to pull out your calculator, you're going to put some inputs into it, and then you're going to look at all the zeros, and then you're going to get ecstatic.
Or a spreadsheet if you're more sophisticated. Yeah.
Sure. But you just need your iOS app to really do it, to look at all of your future rich net worth. So like my critique here is that there's no inputs into the calculation. And this is something that I think all bull market navigators should be aware of. Remember when Cardano finally introduced smart contracts into its system? Mm-hmm. You know what happened afterwards? Like super strongly like anticipated upgrade. Cardano was finally going to get smart contracts. It was going to enter the DeFi arena. And then it introduced smart contracts, and then the token price like plummeted because all of a sudden narrative and idea and future became present and got tested. And everyone realized like, oh, now we have so much left to build. There is a great premium for chains that are still in the idea phase. And so this is something that I think all bull market navigators should understand. Narratives are in bull markets. Here's a response to Santiago's analysis from Fishy Catfish, who's a crypto Twitter account, and says, quote, can't name the use case beyond vague categories, can't name the app that's doing the unnamed use case, can't name where and how those users will show up, and also can't name the decade when the unnamed user will show up for the unnamed app for the unnamed use case. Meanwhile, given that Solana transactions cost fractions of a penny, you need tens of billions of transactions per day before Solana breaks even on revenue versus expenses, given its inflation rate and market cap. Meanwhile, as a secular trend, the cost of transaction execution, data availability, settlement, and the amount of MEV extraction will all trend downwards. Literally everyone is working to make chains cheaper and faster. Nevertheless, Sol will do great by simply memeing chain go fast. And that's normie friendly enough to obfuscate the fact that Sol won't be accruing value before 2030 because 99% of the population can't delineate between the difference between a protocol and a token well enough. This is especially true when the token is a layer 1 gas token, aka like a layer 1 currency, which the market treats with irrational premiums and kid gloves. Plus, I'm sure Chris Bernitzky can also prepare some scripted lines for Kathy Wood to read on CNBC about how fast and cheap it is to create some extra pumps. This entire space is deeply unserious. And this is Fishy Catfish is like a crypto Twitter anon account. And sometimes I just really appreciate these accounts who just come out and say it like it is. And I just have to give it like this is just
okay. But let's explain a few things that Fishy Catfish is saying here. He's basically he shows a chart here, which is Solana revenue fees versus expenses. Okay, let's reorient Bankless listeners to what this actually means. So the first thing you have to know about blockchains is they sell something. They sell something called blocks.
There's only one thing they sell. They sell
blockchains sell blocks. Apple sells iPhones. Blockchains sell blocks. Okay, we repeat that all of the time. And there's a market price for the value of their blocks. Those are and the market pays for that in two ways. One, they pay to get their transaction in a block. Okay, and then they also pay for the ordering of the block. Okay. Right now, Solana's fees, remember I was saying 2.7 billion in annualized profit? That's how much Ethereum right now annualized is making from its blocks-based sales. Solana right now is making about $140,000 in daily fees. Okay. So that's the amount of revenue it's actually bringing in. Okay. Now let's talk about cost. It costs money to secure the network. Right. How does a blockchain pay for this? In fees, but mostly through issuance. It inflates its own supply to pay those that secure the network, the army, the validators, the mercenaries that do this, right? Bitcoin works the same way. They just pay miners, okay? But in Ethereum and Solana, they're paying validators. In Ethereum, they're also paying validators a certain amount in terms of ETH rewards. But in Ethereum, when you subtract the revenue that's being created from blocks-based sales, and you subtract the cost to pay validators, it's actually at a net profit of 2.7 billion per year is what we were saying. For Solana and most of the other chains out there, they are deeply unprofitable. So Solana, for example, in October, they spent 42 million in terms of issuance. So that is validator expense, like cost to secure the network. And they brought in about 1 million in terms of revenue. Okay, so there's a delta there. That's why it's a deeply unprofitable chain at this point in time. That's what Catfishy is saying here. It's basically like we're beyond like the speculative era of crypto. Like that was Series A, maybe Series B. We're post some product market fit. Like we actually are selling block space to the masses, and so you can start to compare something like Solana beyond speculative fervor. You can actually look at transaction revenue and how much it's doing, what the profitability is, and maybe we should be looking at chains from that sort of fundamentals perspective, and less from a speculative, hey, number go up. Like it's valued based on a story that we tell.
Putting these into daily numbers, Solana collects $140,000 of daily fees, daily transaction revenue, and then it issues $11 million in SOL tokens to go to validators who, similarly to Bitcoin, actually have to sell a decent amount of their SOL in order to maintain their profit. Maintaining a Solana validator is actually a pretty expensive endeavor. And so that turns into sell pressure. And this is something I would say, going back to one of Santiago's rationales for why Solana has a 25% chance to flip Ethereum. One of them was Fire Dancer, right? Why is everyone stoked about Fire Dancer in the Solana ecosystem? Because it makes transactions cheaper and faster. It actually reduces the amount of fees that the Solana network can take. And so there's this like identity crisis about Solana that I think is like under the hood, under the iceberg. All they want to do is reduce fees. And also that will just put them further and further away from actually being able to store value in the native SOL token, which goes back to what Fishy was saying, this massive critique that Fishy was saying. The market treats with irrational premiums and kid gloves because no one can understand the difference between a protocol versus its token well enough. If there's bullish adoption on Solana, clearly that goes well for the SOL token, but that is not a given. And this is something that I think the entire industry has struggled to actually produce into its layer one assets, which actually kind of induces this speculative demand about the narrative of tokens, especially in bull markets, because in bull markets, fundamentals don't matter. It's all about the story. It's all about pricing in the future. And it's also about pricing in the perceived future, not the actual future.
Well, let's go back to Santiago's take though. So I actually think that there is the possibility that Solana flippins Ethereum. I wouldn't rate it as 20%. Right. Sure. I would rate this as like, I don't know, in the single digit percentages, but I wouldn't completely say that's not going to happen. But I think if it does so, it will do so based on narrative, not fundamentals, because I don't see the fundamentals. When I say fundamentals, I'm talking about, is the block space profitable, basically? And I don't see those rising, 40x this year, let's say. And particularly when they are, expanding the transactions per second on the Solana in the way that they are. What chance do you give it? Do you think that Solana could flip in Ethereum this cycle?
Yeah. So what are some catalysts, some SOL catalysts that I can actually get behind that it doesn't have now that it could have in the future? We give a lot of critiques. I'm about to give a lot of critiques of like Solana TVL. It's not that great, but that's something that could actually change. Like more stable coins could go to Solana. Sure. ETH could go to Solana. And all of a sudden we can get some actual real TVL into this chain. Doesn't make it tied with Blast, for example. And so another one is like reservation demand for SOL. Okay. So if SOL's not generating revenue, if SOL is inflating, if that can be offset by alternative reservation demands, as in collateral inside of DeFi applications, that can be a real fundamental
monetary premium for SOL.
Monetary premium for SOL, yeah. And so, like, if the validators aren't able to hold on to their SOL because their operational expenses and the issuance rates are so high, then somebody else, like the other sinks for the SOL token, come about. That can largely be DeFi. And so like stuff like this can start to also create a narrative like, oh, the SOL is now money, right? Maybe the Solana community goes through the SOL is money phase because they realize that that's actually how you have sustainable economics at the layer one. So like maybe that can also help propel a flippening, a narrative flippening. But I'm with you. It's in the single digits. Why do I think it's so low? I want to level check some fundamentals about Solana that we all know and love. TVL. Solana is 8th after the 3 major Ethereum layer 2s, Arbitrum, Optimism, and Polygon. Also 8th after Avalanche, another competing ETH killer. And all of these, including the Ethereum layer 2s, are behind Tron and Binance Smart Chain, which are, of course, behind Ethereum as well. Yeah. So, like, it's got some TVL to accrue in the first place, even after all this excitement from Solana. And there is, like, I think there was, like, 100,000 100,000 active monthly users on Solana, and that has since jumped up to 175 in the last month. So there's some growing adoption here. Even after all of that, we have not seen a growth in stablecoins or TVL on Solana all that much.
It's competitive out there, David.
It is
like
competitive.
all of these layer 2s, all of these chains are launching. It's basically all the competition is going on the execution layer. And there's even probably, I would guess there'd be up to 5 SVM layer 2 chains. That's Solana Virtual Machine layer 2 chains that are trying to like clone the success of Solana's parallelized execution environment and launch that as a layer 2. That's going to be competitive with Solana as well. At least I think it will be.
Yeah, and that's just the SVM. There's also parallelized EVM teams like Monad coming onto the Ethereum into the layer 1 space, to be honest. And so and also the whole narrative around Solana is the payments chain because Visa is integrated there. I'm sorry, Ethereum's not even the payments chain. It's Tron. You have to compete with Tron, not even Ethereum. So the whole like Solana Ethereum narrative is, again, just a narrative. And that's just like the first half of fundamentals reality. The second half is like, okay, if we want Sol issuance to net out, as in we want burn on Sol, Solana does have a burn. 50% of transactions on Solana are burned. We need a 500x in transactions volume on Solana to break even to stop issuing Sol more than is burned. 500x. And then if we want to match Ethereum in terms of deflation, which is the Solana narrative, by the way, this is the art narrative that Austin articulated to me when I had him on the show. That needs to be a 1000x in demand of Solana transaction volumes, which brings Solana to a whopping 250 billion transactions per second that it has to sustain forever in order to be at par with Ethereum's bear market deflation volumes. 250 billion transactions per second, Ryan. Does that seem reasonable? Is that a rational number?
So I don't think so. And I think it's time to start looking at kind of these chains from a profitability perspective. I mean, we've been doing this for 13 years, guys.
We've been trying to get this industry to move towards fundamentals and profitability for a cycle.
That said, let me flip that and let me give you the if we're wrong, how are we wrong sort of take. You could make the case that we are so early that competing for market share is the thing that you want to do. That profitability doesn't matter. So if you look at a startup, they don't care so much about your profit. They don't care at all. They want you to recycle all of your profit back into growth. And that in a certain way, that's essentially what Solana is doing. They don't care about profit. In fact, they're willing to dilute the existing, I'll call it in quotes, token holders, shareholders, right? Dilute them and recycle that and subsidize blockchain fees. So the Solana argument would be like, no, we're just playing a game to make loss leader transactions as cheap as possible. And we don't care if we're diluting our token holders right now because we'll make that back later in network effect and maybe potential MEV. So I would say if we're wrong, David, that's how we could be wrong. I'll also say like a second thing, which is Ethereum and layer 2s has not solved its UX problem right now. It's really freaking stupid and hard. I'm moving from Ethereum to like Arbitrum, and like the centralized exchange only supports Ethereum, and so I have to hop to Ethereum and then get on my layer 2. And what do I do? And now I'm on this chain. Now I'm on that chain. Where are my assets? I can't even find them. Like, there's the other case that this cycle, right? Ethereum UX doesn't get solved. Maybe it never gets solved. And Solana just has like a better user experience. You just come on the Phantom wallet. It just, everything works. You pay like nothing in transaction fees. Yeah, if you're getting like MEV attacked, doesn't matter. Users don't notice, and they'll create the killer app that way. So I will say, like, let's be open, and you have to be open to try to figure out where you're wrong. Oh, the last area, I think this could be the case, which is that this whole entire crypto thing becomes less of a revolution and more like a TradFi type of thing. It's just like everything is AML KYC'd.
Right.
Like we don't care about non-sovereign, non-nation state store of value. It becomes a lot like an open database for traditional finance. In those conditions, then like the decentralization of Ethereum might be entirely overkill.
To continue leveling up your crypto game, then you need to get on the Bankless newsletter. It's the world's most popular crypto email and is completely free. Just click below to sign up.